Right, what's going on, team? Hope everyone's having a good day today and a good week. So I'm going to be going over my game plan for shorting the stock market. I've been shorting up in here, and I've been shorting some Netflix and looking at a couple other things. So now we finally got on the weekly for looking at S&P 500 here. We finally got the bearish engulfing candle with our really high weekly cycle. Okay, so this is pretty perfect setup here. We got 1, 2, 3, 4 candles up, a BCI, and then 1, 2, 3, 4 candles up, and then the bearish engulfing setup. So pretty textbook there. Full weekly cycle up. It hasn't crossed yet, and we haven't broken the 8 on the weekly. So there is still the possibility that this continues, but I'd say it's much more slim than the chance for a lower high to appear somewhere in here. So I'm going to be shorting. I've already shorted the stock market. Now I'm just holding my core position, and I've shorted Netflix, and I'm going to be holding that core position as well. And then I'm going to be shorting day trade rallies in the stock market, which I'll go over here in a minute. And I'm also going to be longing the UVXY ETF. Right, so I'll be going over that as well. And you can see on the weekly, and the UVXY is, I think it's measure of volatility, I'm pretty sure, based off the VIX, which is volatility index. So I expect if the stock market is going to keep crashing, it's going to be very volatile. And so we can see, as we've got, this is what the weekly cycle looks like on SPX, right? Coming into the top, here's the weekly cycle on UVXY, right? Right near potential bottom. Stock market has a bearish engulfing setup on the weekly. UVXY has a bullish engulfing. It's like, you can just make money both ways, right? So while I'm shorting rallies on stocks, I will be longing dips on UVXY. Okay. I'll hop back to stocks here. I'll actually hop into futures because some people might want to play futures. But same thing goes for S&P 500 futures. Right, going to look to short the rallies. And here's what I mean by there's still a possibility of continuation, right? We haven't broken the weekly 8, and we're right near the bottom of the daily bands. So it's possible if we can get a little like sideways in front of here while the daily cycle calms down, it's possible for continuation. But I think it's much more likely that we'll get a bounce to a lower high, right? This 8-period exponential moving average is coming down, so that'll probably be resistance. But yeah, so I'm definitely going to be playing day trades until this daily cycle is down further and just shorting rallies in general. Anytime I short a rally, I'll be longing the dip on UVXY. So let's go look into some lower time frames, right? The 4-hour has broken down, which has not broken down since January, the very start of January, right? We've held the bottom of these bands all the way up until now. And what breaking the bottom band signifies is a change in higher high structure on the day trade time frames, right? We switched to lower highs and lower lows. So I'll go into the 30-minute here to show that, right? We had back here higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher low, the highest high, a lower low relative to this higher low, and then now we've got more lower lows relative to previous ones. So we were definitely in at least a short-term downtrend here. I think it's bigger picture downtrend, but we'll just trade what is for now. Okay, we've got pi and the 200 on the day trade time frames have rolled over. We're back below them. The bands are in a clear downtrend now, as opposed to like near the top back here, right? You see how the bands are just kind of like sideways. They're all tight together. Right, that's why the moving averages aren't quite as useful in a ranging market, which is what this was up here. But now you can see the bands are really stretched out here. They're wide. All right, that's because this is a trending market now. It's in a downtrend. All right, if we go back to the 4-hour, we can see. I know I don't want to switch charts too much because I switch a lot. I think my trading view is glitching out here. So let me hop back. If we check out the 4-hour, we can see we've had a full cycle down on the intermediate term, and it's been just like a one-way push down to the 200. So it's possible now and by possible, I mean it's kind of what I'm expecting and hoping for, that we get a little bounce action up to like, 2760 or so, right? But it's possible we just keep getting rejected at the 8, like you saw like right here. It's possible we just get rejected again. So I will be starting my short when the 15-minute rolls over and then adding more at every chance I get. So let me hop in here real quick just to give an example of this. Okay. Get rid of this stuff. Okay. So on the 30-minute here, the 30-minute's still rising, but we're getting back above the 30. Right, so 15-minute is probably getting a little extended. Okay, this is that key lower high on the day trade side right now. Previous support. Look at the 5-minute. The 5-minute's getting pretty extended. It's already cycled back to the 200 on the 5-minute. All right, so I'd consider, if you get a little setup here, make a little bearish engulfing next, I'd consider starting a short. And either you can keep a really tight stop above your entry, or you can play it really small at first, which is kind of what I would recommend. You can play it really small and then keep your risk. Oh my goodness. Keep your risk back above a key lower high, like this one. You rip to a new low, and this was that key lower high you made right after it, which led to more lower lows. So you can keep your risk back above there, which means you're going to have, like, again, if you start here, your stop loss is 1%, which is kind of wide for a day trade stop loss if you're using leverage. So that means if you're just catching this 5-minute rollover, maybe you just add one lot. And, we haven't gotten the bearish engulfing yet. But I always start a little smaller, one lot. Once I can get the 15-minute to roll over, then maybe you add a couple more. And ideally, you want to line that up with when your 30 is high too. Like, look at the previous lower high. Perfect example, right? Your 30-minute was extended here. Oh, sorry, this was actually the lower high up here. All right, your 30-minute was extended here, right on the money of the high. You get the bearish engulfing on the 30-minute. I mean, that's just a beautiful setup. All right, let's see what the 15-minute gave us there as well. All right, so I probably would have started my short probably on this candle, because you came up to above the 30. You got a bearish engulfing. It's hard to see here, but your cycle did cross down right there. So I probably would have, obviously it would have been better just to start it right up there, but trying to look past it, what I would have done if I was watching, I probably would have gone ahead and added here. And then after this happens, right, you wait for the 15-minute to cross again. Huge bearish engulfing. That's where I would have added the second lot. And then you take profits in the new lows, right? And you wait for the next bounce, and there it is again, short again, and boom. Okay, so that's gonna be the process here basically. And makes sense here that the 5-minute did not roll over completely, right? Because 15 minutes still kind of rising. So is the 30-minute. But anytime that, right here, let me make one more comment actually. When you break the bands, you tend to fluctuate to the 200. Right, so it's possible we come to make another lower high in there, right? And when that happens, and that will lead to my next point, anytime a lower high is produced in stocks, I'm going to go right to UVXY. Where we got that? Right to UVXY and buy the dips on that. And you can see the exact opposite of stock market setup is happening in UVXY, right? We've got day trade bands up. We're back above pi on the day trade side of things. Okay, when the 15 minutes getting high on stocks, the 15 minutes getting low on UVXY, or you can trade VIX if you like, right? The volatility index, that's fine too. It's the exact same thing, just the ETF version is UVXY. All right, so I just think this is, honestly, crypto's been really popping lately, so yeah, don't feel like you got to go into stocks or something. I just did it to kind of diversify a little bit. I was paper trading it for a while and just wanted to have a little money in the game. So I've just been doing it on a small account lately. Okay, so my goal is not even really to be super profitable with it, although it has been percent-wise profitable so far. My goal is really just for the consistency and experience trading other markets. But real talk, I also think there is just a really good opportunity here. If this is going to be like, big global macro picture, really key lower high in the grand scheme of things, Right? I think this is a great opportunity to have some bets outside of crypto. Okay, so that's why I'm in this stock trade here. Okay, if you guys have any questions about that, about why I'm doing it, what I'm doing, etc., please feel free to reach out in the chat, and I will catch you guys later. Y'all take care.